Hello,
Good
Miad.
afternoon.
Great to have you back, buddy.
Thank you. How are you doing?
Okay, so I want to acknowledge last time you were with us, I forgot where the euro was trading, but you were looking for 95. Nice work, nice call. Where is your head at now? And do you want to share your screen and show us what you're thinking? It's that little green share
Appreciate it.
button.
Yeah, I'll share my screen in a second. Just want to quickly say hi to Dale, Ryan, Blake, and it's Dale Leaf there. Good to see you all again.
Hi, Mad.
Good to see you. Glad to have
Things
you here.
okay? Thank you. Right, let me share my screen.
Here we go.
Right. Heading right with the EURGBP.
Yeah.
I think that's the asset everybody likes to look at to start the day.
Yeah. So, I mean,
For me,
right to your target, Miad. When were you on with me last? About 4 months ago?
Sounds about right. I believe it was about maybe August, even a bit earlier, maybe July, thereabouts.
Yeah, so euro was trading above par or right at it anyway. So that was a great, at least 500 pip call for new lows. And so I'm interested. Do you think this is just a bear market rally that we're going to get? Are you looking to lay into it maybe up around 102?
I like to give both reasons why you want to be long and short EURGBP. I think in the short term you'd rather stay still short, or maybe look for ways of find dips where you can exit your short positions. I don't think in the short term EURGBP is going to do a lot of favors for bulls. The way I analyze when I look at that pair, I mostly take into consideration the yield convergence, and but the one I like to look at is actually the rates, the short end specifically. So this is a synthetic chart that shows you the difference between the German bond yield on the 1 year and the US bond 1 year as well. And if I were to overlay this with EURGBP, it gives you a pretty decent path to why EURGBP was heading lower most of this year, and also why it's kind of balancing out, because yields are sort of balancing out. I think after what we heard from the FOMC last time, where they told us the yields horizon is uncapped, it can go as high as it needs to go, that leaves us a little bit for interpretation. So we have to go by data to see if the US yields will eventually peak. With Europe, it's a bit different. They're a bit behind with the hikes, and also inflation is still double digit or thereabouts in Europe, which basically helps for yields in Germany to push up against the US ones. But that move will only happen once US yields peak out. There's one way of looking at it, and there's another way of looking at it by looking at the federal funds rate futures. I like to look at the one from next year, so December 2023. And for everybody who doesn't know what that chart is, it's very simplified way of how market is hedging against what interest rates will be in the United States by December 2023. So as long as this chart keeps plummeting, I don't really want to call it top end dollar. And there's other dynamics in play as well, which is right now pushing the dollar higher. But once I see that this shows signs of strength and sort of bottoming out, I think there's a good reason to believe EURUSD to move higher. So in terms of level, this time it's a bit more difficult. 96 seems to be reasonable to hit for the rest of the year. But big picture, I believe the biggest move for EURUSD will be to the upside, not downside, in the coming 5 to 6, possibly 8 months, as we are potentially, if Euro picks up fire and the yields keep pushing up, I can see 116 achievable.
Okay, so that's a switch. Do you think there's a chance for one more retest of the low based upon that last chart that you showed? Maybe take it out and shake out people that think that the Euro's bottom and have them doubt it with one more decline?
Yeah, 100%. I don't think Euro has found the bottom. Mind you, there is still time left for the rest of the year to really see the dollar strength. So I don't think now is the time to buy Euro. But I'm conscious that the bigger move for Euro naturally should be to the upside
next year.
Next year, there will be the potential. Here right now, we are more in a choppy zone. So yeah, you can see some downside, it will be quite grueling to trade it, in my opinion. But there's definitely some more downside. While we're on the subject on euro, I really quick wanted to touch on EURGBP as well. I think there's better opportunities if you are bullish euro. I can definitely see a scenario where we see 90 getting printed this year again. If I were to show you the same thing, so yield divergence on the short end with the UK. The Bank of England kind of gave us the hope that yields aren't going that high anymore. Where the ECB is doing the opposite. They say they don't know how it's going to go yet. So that certainly gives us some more upside in EURGBP as well. Again, 0.90 seems to be reasonable for this year, potentially higher as well. And so I feel like if you're bullish EURGBP is the smarter choice. With Euro USD, there's a lot of balancing act.
Okay, great. Yeah, you know, you have more conviction, and you look for the opportunity. Don't marry an instrument, marry good risk reward, right?
Exactly. Good habits and to good results and better profits as well.
Okay. Any view on so you're mainly following any other clues that you're getting, for example, with rates on the commodity currencies, Aussie, Canada, Kiwi? Where's your head on those?
Against the dollar, I feel Aussie hasn't bottomed out. I think these lows for sure, they are still aggressively can get attacked. We've heard the news of China taking the COVID policy away. It's never going to be like, oh, we're going to stop it. It's all hunky-dory. It's going to be a transition period. China is a huge economy, Dale. By the time it turns around, it's going to take a good few months.
It's in like my opinion, huge battleship. It's a battleship.
Yeah, it has to
not
turn
a speedboat. Yeah.
Yeah, it's not like that. You're right. And for that, for Aussie to kind of find the positive environment back from China, you're probably waiting somewhere around March to see a decent rally in Aussie dollar. That's how I see it. So I think the zero policy is coming off. China is certainly going to help its economy, as to some extent commodity currency like New Zealand and Australian dollar. I think it's a bit premature. I think we're going to have a bit more chop. There's going to be occasional rallies, but I don't think there's going to be that oomph and that interest from other investors to start getting in there. You see some bottom fishing, but I don't think that's the end either. I think Ryan alluded to that. There's potentially we're going to have another dip as well, and I'm really much on board with that. That makes a lot of sense to me to see another dip.
Ryan's bullish right now, I believe, against this resistance. Yeah. Thinks we're going to pop out of this resistance, but that would say that the dollar has a little bit more weakness before it maybe reasserts itself. You follow anything happening in the gold or silver market? Is it noise or is it real? We're approaching some pretty important resistance levels in both. You have a
Glad you mentioned that. So my chart we're looking at is US real yields in the candlestick, and gold is an orange, but it's inverted.
Yeah.
So you can see gold generally tends to follow the flows of where real yields are headed. In my opinion, as the economy starts slowing down, grinding to a halt, usually, and that's for my research, 3 to 6 months before all of that happens, gold finds a bottom. I don't think buying gold is a bad idea. I think if you buy gold at these levels, anywhere from now to another 12 months, you certainly will see some profit. And to a great degree, I believe you're going to see some profits. Whether now is a great time, this is the bottom, or whether we're going to see, let me actually show you that chart, whether we're going to see another dip or so, it's always a little bit difficult to say at these junctures. I tend to make my living out of being involved in the meat of the move, not necessarily at the bottoms or tops, because they're a bit more difficult to predict.
You're going to live longer. You live in Scotland, Miad, which, I remember talking to Martin Armstrong, who talks about, a lot of, Armageddon type stuff, famine, war cycles, everything. And I said, well, Martin, where can you go in the world to ride out the storm? And Scotland was one of the places, and New Zealand.
For sure. I'll keep you hot free.
Huh?
I keep you hot if you want to come over.
All right.
Live a bunker.
All right. Anyway, you must have a book of, how a man from Iran ends up in Scotland is, you know, quite amazing, I would think. So, anything else you want to cover here, Miad? I mean, I kind of have the gist of, you know, you're looking for maybe $1 top early next year, and you really favor the euro. So it's just a matter of picking your spots on that and be
Yeah, I
patient
feel the
with
most
Aussie.
actionable. Yeah, I feel the
And
most actionable trade here.
EG
Certainly,
is euro pound. Yeah.
I feel like that's a better trade. I was long here, then Rishi became
Right.
PM, and I
Yeah.
knew there's going to be some short covering, long covering. I had to get out, and I'm looking to reestablish a long,
Okay.
possibly today, or if not, I wait for the CPI data coming this week. And talking of CPI data, there's another news coming out in the United States. There will be the midterm elections.
Yes.
I believe it's more or less it's established. I think where we headed. It's unlikely that Democrats hold the House and the Senate. So there's going to be
Yeah,
some
it's unlikely.
disparity.
Yeah, it's
That
not gonna
tends to, funny enough, that tends to help the U.S. economy because they can't rack up as much as debt as they like. People
Yeah.
like to see that. So I think
Yeah.
that's going to be another factor possibly helping USD for the rest of the year. But
Okay.
we know more by the end of the week.
Okay. And you know, that spike we had in euro pound, that was on the collapse of the gilt market. So you would think that we could at least fill in that wick that lasted for about, I don't know, 30 seconds. The high up
There
there,
was a total
93.
collapse. Yeah,
Yeah.
it was a total collapse. Happened overnight. I can tell you're old school. You see wicks, you're attacking them. You're right. When I
Yeah.
see wicks in the market, larger wicks like that, I like to think there's certainly room for that to do. And more often than not, you're right. And if you look in any other, even FX market, when you see these
Right.
larger wicks, it's never ever, almost never ever the top or the bottom. It always gets revisited. So
Yeah.
certainly I like to explore some of that. Whether we're going to see the whole lot of it or not is still debatable. So while you mention it, I want to show you another one which got revisited just most recently. It's not your go-to currency, but it's a USD
Oh.
Turkish lira. So we had this massive wick here
Oh,
on the
yeah.
back of the central bank intervening. And look at
Yeah.
that.
Yeah.
Easy
All
fill,
the way. Yeah.
all the way.
All the way. Great example. From a veteran. It takes someone who's seen a few cycles to know that, and has been
Absolutely, yeah.
putting in his screen time to become good. You know, that's what it is. You can't learn experience. You have to put in your screen time, everybody.
You have to take a few rounds on that carousel.
Yeah. Anyway, Miad, best way for people to follow you, stay in touch with you, and really great interview. We were able to cover a lot of ground and just get right to it. And I love how you just can boil it all down to a few sentences so that people get it. Best
Yeah,
way for,
appreciate it.
you want to show your website, buddy?
Of course, yeah, why not, Dale? So I've got a website as well, Speculators Trading, been running for over 5 years, where you get to see sort of monthly videos, what's happening in the economy, what's important. We also have some exclusive London Fix videos, which is a specific strategy to do around the London Fix that happens every day. Also do reviews on the trends and which ones we're trading. If you're a bit unsure if the pricing isn't really for you, you can always try maybe a monthly membership and see if really trading is for you. Some of you might just be still in demo trading, you're not too sure. So you can test the waters, see if there's something that you like to engage with. I know a lot of you are working as well, so trading isn't your full-time thing. So I run the course around that. So the material and the actionable setups are going to be in a way that you can take advantage of that as well. If you're new to trading as well, or if you're limited for time, there's always a weekend read, and throughout the days, the information you will get is going to be more timely rather than just filling your screen with everything. So if you're interested in that, I'd like to join you there.
I have one question from Paul. He's curious to understand why you think the euro will stand up against the pound. Is that about the yield pictures that you see?
Good question. It's not only the yield. The bond market digests all the economical data and starts pricing things in, which makes mine and your job easier. But no, it's not only the bond. So bond is telling us that the energy crisis for the UK will be worse than Europe. The price cap for the energy rise in Germany is much more attractive for businesses that is in the UK. And apart from that, our current account valuation has been absolutely destroyed this year. And I say our because I live in the UK, and it's just getting worse. It's not really getting better. So that's a lot of the dynamics where if euro is bad, GBP right now is worse, and it's going to get worse against the euro.
Okay. All right. Well, I hope you and your family have a warm and safe winter, Miad. Thanks for joining us today, and thanks for sharing your ideas. Some things to, focus on for a narrative going forward. Miad, thank everyone. People will appreciate it. They're going to contact you, and really appreciate you being here today, buddy.
Thank you, everybody. Thanks for having me, Dale. Thanks, Ryan, and Blake as well, and the whole community. Looking forward to speaking to all of you soon, very soon. Thank you.
See you.
Cheers. Bye.
Adios, buddy.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.